by becoming rich.
Take all your money, buy Bitcoin.
You can wake up every morning and say GM.
GM. All right. Daily levels, Wednesday. And it's the 7th of August. And we've seen a great reaction so far from BTC and the market as a whole. So what's happening? Well, here's something that I look at on and off on a kind of higher time frame, a yearly VWAP. And I mentioned this back when we lost the area here, back in July, that was the first real sign of weakness from the yearly volume weighted average price, where Bitcoin was holding the midpoint, the VWAP, holding it, then lost it. We came back up to the +1, dumped down to the -1. That doesn't infer anything about where it goes next. Doesn't mean that it's going back to there. If it obviously gets back to the midpoint, you'd be looking at, does that now flip to resistance, right? And do we start to trade downwards, where it goes to 60 and then back to 49 or 50? That's obviously a bad sign, because as you can see, in bull market years, price tends to remain above the VWAP. That's the historical tendency. It doesn't mean it will do it in the future. Apart from the early year dip here back in 2023, we spent most of the year trading above it. Also, you go back to 2020 and 2021. I'm just going to single out the bull markets first. Obviously, COVID, post-COVID, reclaimed, spent the entire year trading above. 2021, after the year began, we moved up, we traded higher. Once it lost that level, went down to the -1, and obviously traded between that and the -2, and then moved through the range back to the +1, to the other extreme, and then back down, back into the middle. When price starts doing this, it's a sign that it's not trending. So one of the things, and of course in bear markets it does the opposite, where we spend the majority of time selling off and going lower. So one of the things that I see from this is that it's further confirmation that on a high time frame, Bitcoin is not trending. And that actually would limit the opportunities. Like, something has to shift. And there's still so much expectation by, traders to think that somehow Bitcoin's going to go to like 100K by the end of the year. It's not impossible, but it's very unlikely. Bitcoin's so big as an asset that it takes much longer to develop its moves, right? Anyway, that's just something that I check in on every now and then. But the market here, why is it bouncing? Why is it bouncing so much? Why is there, this squeeze up? It's really simple. When you have a short, sharp sell-off and mass liquidations, especially like the kind we saw on Monday, I have not seen as much pain on the timeline, as many liquidations on the actual data, and as much of a sentiment shift as I've seen in a long time from what we saw Monday. So what does that tell you? It tells you that many, many people were forced out of the market. They were forced to sell down here. When people are forced to sell, there is nobody left to sell when a price bounces. Okay? Bitcoin went through a decline, and throughout all of this, from 70K down to 58, this was selling that was structured, right? This was not people getting liquidated. This was bigger players selling mostly spot bags, right? So for a week, selling. Sure, some people try to catch the bottom and they get stopped out. But predominantly, that's genuine selling. And you can actually look across this before the liquidations really began, which I would say was on this breakdown here, which then led to the continuation. You can look at from the very top, just taking it from that top candle, right down to before that drop. And you can look at that as a way of understanding a volume profile for the selling that we saw. Meaning, if the assumption is that this selling was mostly led by spot, not really a lot of people getting liquidated. The liquidations really began below 60, and then you can see how it accelerates. There's a few levels to watch if and when price comes back up, because that's where actual, real, if you want to call them, real spot sellers were there, real bearish sellers were there, and they may start to sell again once it reaches those levels. But since then, since this last part, where I've been talking about 58 and 60 as the bounce levels, right? The reason why 58 and 60 is because they're two key levels, both in terms of price, past price history, and the chart itself, right? That 60k is where that breakdown happened from. So there's obviously some aggressive selling that went through there. And then 58k, that was the old level that everyone was expecting, basically the last point where the market could hold, and it failed to hold. So when the market and price comes back up into this area, that's where you would expect to see the first wave of sellers. Potential. Now, in a very bullish market, what it'll do is it'll come up there and it'll gap through it. And that would indicate that we're probably going to continue quite a bit higher. But to understand what's happened to here and why this move is currently grinding higher, and it's one of those moves where you feel like, oh, it feels like it's going to pull back at any moment, but it never does. There simply are no sellers. There's simply a lack of sellers, right? If you wanted to sell Bitcoin, you sold 70, 66, 65, 63, 61, 60. If you wanted to sell Bitcoin, you sold there. If you didn't want to sell Bitcoin, but you were getting flushed out or liquidated, that would have happened down here. Push down, push down. So, when it reaches the bottom and it starts to bounce, what can make a bounce end? Sellers. But if people have been forced to sell for the past 24 hours, all the way down, from 60 down to 49, there's no one left. So all you have are the buyers at the bottom, of which there aren't many, right? Most people were not buying the bottom, and if they were, they're probably stronger hands, longer term, or some smart short-term traders who will be selling. But there's not a huge amount of people longing that bottom. People start to long here once they feel the bottom's in, yeah, but not long in the bottom. So there's not a lot of selling pressure. If there was people buying up here to stop the market didn't stop going down necessarily because there was really, really strong support. Mostly in these kind of moves, the market stops going down because you run out of sellers. Bitcoin was down 30% in a week. That's a huge move so fast, right? 29.6, 30% in 1 week. Bitcoin has gone down 30% before, but never this fast in our current market, right? Not in the current market we're seeing since, FTX collapsed. So it's really easy for price to bounce to 58, and it can look like, oh, it's strong, it's just grinding up, it's going, nothing's stopping it. It can't be, it's just relentless. It's not strength, it's a lack of selling. And that's why you'll see as well, volumes will be low or average on the rise, which again is fine. You don't need super high volume on the way up. The super high volume comes at the lows as capitulation happens, and then you have a reversal, 2 nice big volume candles there, as you can see. And this part of grinding higher, it's not something to do a volume analysis on, generally, because markets, when they're in between two areas, can just drift. Bitcoin can just drift from 54 to 58 with no volume and very little resistance. Because what matters is what happens at 58. Because that's where there's going to be the first set of sellers and then 60. So that's just to understand the actual dynamics behind what's happening here. After large flushes, large liquidations, price will just rise and sort of drift due to a lack of organic sellers. If you go and study previous mass liquidation events, of which you should really go back to some of the biggest and most brutal, if you're looking at like something like this one over here, right? Because it is so aggressive where Bitcoin went, let's just not even from the highs, but just from this This is basically in a 1 day time period. So in 1 day, Bitcoin went down 27%. Insane. And so what happened after? You had a massive long wick, and then price just drifts higher and drifts higher until it runs into resistance. And it runs into resistance around where the original breakdown began. You see that? That was where there was heavy selling here, right? But really just pretty standard. Gap down, sideways, gap down, sideways, gap down. But then it went, instead of going sideways like it did here, it had a collapse. So you look at where did the collapse start from here. On the bounce, that's where resistance comes in. This is one of the styles I showed you in trading analysis last night, which you need to be watching out for, because in a particularly weak market, it won't reach that resistance because the market's so weak that sellers are just desperate to get out, and they're trying to get out before that happens. If you look at one of the paths I was talking about over here, right? If 58k is really going to be that level where sellers are desperate to sell, you might see it not reaching that. But I think this market has a bit more strength than that. And we can see that so far. It seems like from here, it probably will touch at least 58, and then we'll see. But as a trader, you have to be aware of what's going on. This is not, at least not yet, this is not a sign of a really strong market. Now it can be, and we've seen these moves turn into big reversals and trending moves in the past. You know, March 2023 is the best example of this. Now I don't expect V reversal, but V reversal can happen, so I'm certainly not ruling it out. It wouldn't be the highest probability for me, but you can see here, where obviously we had the big scary potential collapse of USDC and all of that, and it didn't come to pass, and Bitcoin just grinded up and grinded up and grinded up. And I'm going to talk about this on Trade of the Day as well in the context of impulse candles, which is very good. You'll love that. Grinds up, grinds up, grinds up, and then gaps through, clears out all of these previous levels, blast through, blast through, blast through, and that is a really strong, like proper V reversal, massive strength, which of course we know led to Bitcoin not just clearing through back to the range, but higher and holding higher and clearly breaking out. So you go from having the big scary sell-off to clearing it all out and actually having an all-time high breakout, or not a new yearly breakout back above 25. This was led by the Fed though. Obviously the panic happened first, but then the Fed came out and said, we're going to print loads of money to save the banking system if we need to. That was a perfect catalyst for Bitcoin, because what is Bitcoin? It's a response to irresponsible central banks. This is exactly why Bitcoin was created. So, you know, when that happened, people are like, oh, Bitcoin fixes this. You know, that meme about Bitcoin fixes it. But literally, Bitcoin fixes that. So, there's nothing like that coming, as far as I'm aware, and as far as I'm concerned. There is nothing coming that's going to be an admission of massive printing or massive liquidity injection. Because all of this talk about the Fed doing an emergency rate cut is way too premature. And I don't even think they'll do 2 cuts in September. I think they'll just do 1 as standard. The market's got their little shock, but unless things get significantly worse, and not just worse in terms of stock market pullback, because, you know, Professor Ayush talked about this on our crossover stream. It is not about the pullback, right? The Fed do not look at this and think, oh my God, we need to loosen financial conditions. Look at it, right? So why did the Fed not do anything during this? They didn't cut rates. They kept rates where they were. They didn't do anything during this. And I mean, to actually get the Fed to a position where they have to change, it takes a lot. They were fighting inflation in 2022. And I remember through all this, people are like, it's too much, Fed, you have to stop raising rates. They raised rates from March, over here. They raised rates from March until June of 2023. All of this was rates. They were rising rates. And every time it would crash down and make a new low and crash down, and rallies would fail and crash down, people were out saying, you can't do it. Elon Musk was saying, you can't do this, you're going to destroy the economy, you have to cut rates. They never did. They still haven't. The Fed are going to be very slow to act. Now, if something happens that causes a further collapse, and you start to see some signs of stress across the system in other areas, yeah, they will probably be pushed into action. You'll probably see this more in like the bond market or in credit spreads and these things that are like, signals that people use for real market panics, and the VIX. If the VIX goes, it's obviously come down, and if the VIX goes massively higher again for whatever reason and volatility spikes. But I don't think any of that's going to happen. I think the Fed are just going to chip along business as usual. And so the point of all that is that Bitcoin probably doesn't go to like 70 or 75k. But a rally here for no reason, in air quotes, is very possible. And it's something I talked about last night and said I would cover it today. And this is just about the logic. So what people do is they get very reflexive and reactive. So they react too late. So instead of reacting when the market is not crashing, they wait until it crashes, and then they look at why did it crash. And some people say, okay, it's Japanese yen. Some people say, okay, it's recession fears and a slow economy. A growth scare is what people are saying. That's the current narrative. Now, obviously, right away, people are already saying, oh, growth scare's passed. So I'm seeing complacency already. It doesn't mean we can't go up. We've just liquidated a massive amount of people. We can easily go higher here. Complacency doesn't mean that the market has to nuke. Far from it. But I see a lot of shrugging off of what happened. From my reading, a lot of people are like, oh, so it's not actually a recession. Oh, it was just Japan. Okay, cool. Business as usual. And it's really trying to justify getting straight back into positions at bad points, bad spots, instead of being patient. But the reason why there can be a rally for no reason is that there's a huge amount of participants who don't want to buy because they're waiting for economic data, right? They're going to wait and see, no, I want to see GDP. No, I want to see the jobs data. No, I want to see signs that there isn't a recession. I don't want to buy Bitcoin if there's going to be a recession. Okay, so what you're saying then is you're going to be sidelined, which is fine. Everyone buys for their own reasons. But the market, you cannot wait until you have confirmation of these things. You can't wait until there's confirmation of no recession. By the time we find out there's no recession, we'll be way, way higher. That's just how it works. Same reason for that when they admit, and they actually announced that there's a recession. I showed this on Weekly Outlook. By the time they tell you there's a recession, it's already over, like 80% of the time. And the markets are higher. So you don't wait for official word on that. And the biggest thing here that I see that has a case for continuation of this rally, at least up into this resistance, is the sentiment shift. It's really simple. Every time the market goes down like this, as it rallies, because think about short term. This is where long-term investors get too short term. Normally, think about it and ask yourself this. Be honest with yourself. You normally trade on a daily chart, right? Let's say you're mostly looking at your Bitcoin bags on a high time frame, right? You probably work, you've got a business, you trade part-time, you invest, and you don't overanalyze BTC because you're more of a holder than a trader. Those type of people have been stuck on the 1 hour chart for the last week and will continue to be. It's just this weird tendency that the market has to do of when you see these huge moves. When you look at it on a daily, the first thing people ask is, how could I have seen this coming? Right? Whenever it was here and here and here, and you're looking at daily candles, the daily candles don't look that bad. Obviously, yeah, it's going down, but look at all this support below us, that's fine. You see it and it's like, all right, okay, it's pulling into support, probably going to form a higher low. And then suddenly that happens. You're like, well, last point to stop, should stop there, and then boom. And what they realize, which is wrong by the way, they're like, I shouldn't be looking at the daily chart because I can't see this is going to happen. I would have needed to see the 1 hour chart to see that was going to happen. And sure, you can see more on this, but if it's not your game, it's not going to help you. It's actually going to hinder you, because what are you going to see? You're going to see loads of sharp movements, and it's going to flip-flop your bias and opinion. So now what we have is everyone who was previously a long-term trader is now a short-term trader. This is never more true than when you look on Twitter. Most of these people who are fucking spouting bullshit about the banana zone and how we're going to 100k and how these massive breakouts are coming. And I'm not saying 100k is bullshit. I'm saying when Bitcoin was over here doing a distribution top, or when Bitcoin was failed breakout at 72k, you know, after extended rallies, and people are max bullish and max long, but they're talking about high time frame stuff. They're like, we're going to break out and we're going to trend for the next several months, because that's what the type of trader they are. They are actually buy and hold. Then everybody turns into a short-term expert over here. All I saw on Sunday, Monday, Tuesday was, you know, this is going to happen because we're reaching this level, it's going to reject, or this next thing is going to come out about Japanese government bonds or recession or whatever. Powell's going to come, is he going to do this? And all it is just people who are normally one style of trader stepping over into an area that they don't normally trade. And that's not, you know, it's not even like that's necessarily a bad thing. I think it is. I think that if you are not experienced on a certain time frame or a certain system, you should not allow the market to pull you onto another one. And this is pretty, you know, rational logic, right? Think about it. If you have traded if your systems are all on a 1 day chart, and you've done that for 5 years, and you're really good on 1 day charts, and they all work on 1 day charts, what do you think you're going to do if you jump onto a 1 hour chart because the market dumps? You're not suddenly going to be good, because all your experience, which you are very good at, is on a different time frame. And it's fine to look at it, but a lot of people are acting on it. And if you ever feel, and this is something you should do in your journaling and when you're keeping an eye on your emotions and your psychology, if you find that you're ever making trading decisions based upon what the market has done rather than what your systems are telling you, stop immediately, right? If you previously had a plan based on daily charts and certain levels, and then a move on the 1 hour chart like this, flush down and bounce up, starts to make you think certain ways. Perfect example is about de-risking, right? I'm mostly a short-term trader, but I sold my long-term bags at 63 on Friday. And every day since the crash, so Monday and then Tuesday and this morning, I get questions in DMs from people saying, when are you going to buy back in? Have you got a plan? What are you going to do? You know, how are you going to get in? What do you think now? I made that decision based on a high time frame. It was my spot bags that I've accumulated since 2022, after FTX, and all the way through the first half of 2023 was the majority of what I bought. So I'm not going to buy back in 3 days later. I don't need to. But also, it's not the time frame. Even though I think this is a bottom. I've talked about this now. The way this has moved, particularly on Tuesday, tells me that there's a decent chance that this V reverses to at least 60. And if not, you know, if 60 doesn't have sufficient supply coming in, it can even go to 64. And I'll talk about that in trade of the day. Low time frame, I see a rally, continuation, even a big rally. That's all possible. But none of that changes my higher time frame view, right? Which is, this could be the bottom, but I don't have enough confirmations yet to re-enter spot bags. As of course, look at Bitcoin. It's clearly not in an uptrend. And some of the sharpest rallies you get are in bearish moves, right? You've seen this one over here. I remember trading this one. Price went down and down and down, took the lows, boom, massive squeeze for 5 days, and then collapsed fully, and we went lower. The sharpest rallies are quite often counter-trend rallies. So in a counterintuitive sense, like here, massive flush out, big rally up, in a kind of counterintuitive sense, you almost, well, at least for me, I almost don't want to see Bitcoin do a V reverse, because I know that that is going to make people FOMO back in, and quite often can actually lead to a rollover. One of the best things you could see would actually be for price to get slightly worse. And I had some paths here drawn out that I want to cover. So this path is not, this is an example of a bearish, like fully bearish, like 2021 type of bearish. is an example of this path here, which I'm not saying it's going to happen. Far from it. I'm saying that is one path you would see. If this is bad, you see it chop sideways, fail to go higher, fail to get above 60, chop sideways, and then probably drops off. That would be like Bitcoin now building value at lower levels, right? Because it's spent time and value up here, it's now lower. Bitcoin needs to reclaim these levels above to become bullish again. If it doesn't, it's stair-stepping lower. There was also this. Yeah, this is like the perfect path I could see would be this, where your initial bounce happens, but then it sells off again, because that's what makes people really panic. And then the first ETF rally, which you can see on this chart here, the first ETF rally, which is from the very, very low, in January to the very, very top in March, the point of control for that is right around here, right in this cluster. That's actually the highest volume node. Now, it's a very widely dispersed volume profile, because of course it was a strong trending move and most of the volume was distributed kind of unevenly. Look how wide the value area is. But still, that level, which we wicked down through, could come back and be revisited. And I always look for confluence on these ideas too. And it's also, I think it's if you're a pullback lover, fibs, I think it's 618 as well. Yeah, it's exactly at the 0.618 pullback. So a second test of that will get people bearish, yet you have a point of control as confluence and you've got a 618. If it did that, I would be looking at potential for it to hold and rally up and then move up into the first rate cut. We rally into it. You've got the Friday close. So most of the crash happened on the weekend, Saturday, Sunday, and then early Monday, right? So you've got the Friday close, which is important, and you've got the monthly open, obviously very important. There are two levels on the way back up that I'll be watching. And so, yeah, if you see like immediate continuation rally higher, it's quite often not a good sign, because it just makes people really FOMO back in, and then it leaves such a gap behind that, imagine it just goes straight. If it goes straight up to 65 and it's like that, like this black path, I mean, what happens there? Where do people buy? Like, do people buy 65? If they do, then any pullback immediately puts them under pressure. Even if it doesn't go to new lows, they're probably going to get bleed down, right? And so whatever happens. If it V reverses, great. If it doesn't, great. We'll just trade it as it comes. But the higher time frame confirmations to get back into spot bags, I don't see them there yet. As and when I see them, I'll absolutely re-enter. So the point of that rally, this rally for no reason, is something that you should always think about, right? Whatever made people exit, they want the opposite of that to get back in. So people were liquidated or sold or panicked or forced out because fears of recession and fears of Japanese yen carry trade blowing up, which might lead to other things blowing up, right? Contagion. We've got a stock market sell-off as people have a growth scare and they think, oh, maybe it's not good to own these Magnificent Seven that have been doing so well. Maybe we want to, Warren Buffett sold his Apple stock. All these things that people are afraid of. If they're still afraid of them, meaning we don't have confirmation that there's no recession, right? There's still recession potential. There's still potential for stock market weakness. There's still potential for the carry trade to keep unwinding. There's still potential for credit spreads to get worse, whatever. And so if there isn't confirmation of those things reversing, people won't want to get back in. And that's why I can keep pushing higher, because then they're really tested in price. They're like, shit. And how many times have you felt like this? It keeps going up and up and up, and you feel like it's not going to pull back. It's that moment where you start to think this is not going to pull back. And that's where people then really have no choice but to get in. And quite often this is where the market tops out. We had this over here. That was exactly what this big pump was, right? Look at that. So Bitcoin went down below the lows, start of May. A couple of weeks later, we were going to break all-time high. How could this not break all-time high from here? And that massive impulse candle, which closed at the highs, that was a bullish close, right? Bullish close. And so many then were saying, oh shit, like I have no other choice because it's not going to pull back. And of course, we know it pulled back, but it's that feeling. Whenever the market was just consolidating in here, people didn't really think much. They go, oh, well, that's just a bearish retest, or it's going lower or whatever. So be mindful of that. It's a good time to watch and think about, your emotions and your psychology and the market psychology as the price climbs for what's going to happen next. All right, there's a couple of things. There's one last thing I want to look at here, which is ETF, the overall ETF volume profile, which I think is interesting. I'll leave that old path on there just as an example of one. And if you're seeing this, I will draw a million different paths because I want to consider everything. This is high time frame bearish, as we've broken structures and Bitcoin obviously is making lower highs and making lower lows. It could also be high time frame bullish, not yet, there's not enough confirmation, but it could be a massive leverage flush and sweep out and reclaim of the lows. That could be very bullish. Those things will be, to me, that will be determined over the next few weeks. Because one, are we going to get this, where Bitcoin's price just drifts around inside the same candle it nuked down, and then drifts lower, right? The reaction after is much more informative. Or do we get something like this, where we had our first flush, we got our second flush, and then we reverse, which would mean we go slightly lower? Do we go into some kind of sideways? Do we go into a complacency bounce? There's a million different ways this can move, and we're only 2 days post-crash, so you can't tell yet. You have to let some price action develop to see what might be happening next. But a lot of this market has been dominated by ETFs, and they launched here, 11th of Jan. So if I draw a volume profile across all of that, this is what we can see. Here's Bitcoin's total volume distribution since the ETFs launched, which is important because, of course, a huge amount of the buying has been ETFs. And currently, that is, if you look at this, the totality, the vast majority of buying and essentially underwater longs are above us, as you can see. So most people who've been buying since the ETF launched are underwater. If they haven't sold yet, they're underwater. You can also see this if you just go and look at the ETFs themselves. Just go to IBIT and do a volume profile across all of it, right? All of this. I think this actually looks a bit more clear. All right, so this is the BlackRock ETF, which is the biggest one, the one that's taken in the most money. And since it launched, every single day, all the volume that is distributed, majority is at the highs. So you don't have to guess and say, are ETF buyers selling or buying, or are they underwater or not? First of all, they are selling. There are definitely ETF participants selling. Now, not IBIT, not BlackRock's one, but the other ones. There are definitely ETF holders that are selling for whatever reason. Maybe it's because the way the market's moving. Maybe they're just de-risking or whatever. But from all of the volume that's been traded on IBIT, it has to get back above this level, which would equate to probably 62 or 63 on Bitcoin's price. Obviously, the shares of the ETF trade at a different price. And until then, the ETF, again, the majority of ETF volume is above us. That's a sign of resistance overhead. That's a sign that these people are wrong. Whoever's bought up here is currently obviously wrong. If you buy something and it goes down, you're wrong until it's confirmed the other way. So that's something worth keeping an eye on as well over the next, again, this weeks. Bitcoin has to build, reclaim levels, build a base, all that kind of stuff. And I think that's something that's important to watch too. Like, we have 17.1 billion in total of inflows, net inflows into ETFs. If Bitcoin stays in these lower areas, right, if Bitcoin has broken this range and is unable to reclaim right away, you're probably going to see more outflows, which can add more sell pressure to BTC. Because at some point, these holders are going to have to say, oops, I was wrong to buy 70, 72, 73, 69, 68, 66, and they might sell out. That also does not have to mean that we go to zero. That can also just be part of a capitulation process, making the weak hands of the ETFs, right, making the more short-term minded ones, making them panic and sell and get out before we go higher, because they're not going to get liquidated, right? This big flush down, That doesn't take the ETF guys out. It's spot ETF. It shares in an IBIT trust. Those type of guys, BlackRock, Fidelity, ARK, and it's not BlackRock themselves, it's their customers. Those type of investors have to choose to sell. And so that might be if price turns bearish again, drops lower, they might choose to sell and capitulate. And then that could be a sign for bigger players to step in and accumulate, and then up we go. But we'll see. So overall, it's only been a day or two after. And for me, looking forward, it is all about patience still. That's it. GM. Actually, I'll look at Sol and ETH, because I think Sol had the best reaction so far. ETH is, quite clearly bearish. I mean, it's broken. This isn't just a range sweep, right? This low, if you're looking at like this 27, 2800, oh, sweep the lows, boom, back we go. This is literally a complete breakdown. There's no other way to look at this. ETH can rally another 10 or 15%, 10%, and still just be a bearish retest. Right? ETH can do that and still just be completely bearish. Not saying it is, I'm saying that's what it could be. Sol has held up much better. And as we look at Sol, it took out those lows and it's back inside. But, testing something 7 times, 1, 2, 3, 4, 5 times we got a chance to buy this 120. I guess 6 if you include there. And it's bouncing up. Okay. Just like it took the highs out before and came down, took the lows out and comes back inside. It's now back into an area where you really don't want to touch it. Where you definitely don't want to have a strong opinion on Sol is right in the middle. Right? You can be bearish and sell up here. You can be bullish and buy down here. Those get rewarded. Quite clear to see. Buyers and sellers in those areas do well. Anyone who bought that flush, this would be exactly where I would start selling. Because this is where you're into the period of max uncertainty. Right in the middle. So, for that, patience as well. And don't forget, look at this chart. Right? It was nice, strong uptrending. It is potentially, rolling over. Would not be a surprise if that was actually a weakness sign. Not that it will be, but certainly Sol would need to, hold and build and come through and start to move above that 172 again. Sol going there, that's almost certainly bullish. There's hardly any way that could be a bearish setup. And so it takes time. And, these sharp rallies where Sol's up 40 or 50, or not 40%, where Sol's up, 40% off the lows, starts to make people panic. Oh, fuck, did I miss the lows again? Have I missed the golden generational entry? Almost certainly not. Right? Patience, patience, patience. That's it. GM, 2 streams today, 4 p.m. UTC, 6 p.m. UTC. See you then.